Welcome to the Cash Flow Academy podcast. I'm your host, Andy Tanner. This is where we make investing a lot of fun, make it simple. Everything we teach is real. So it's great to have you with us, and great job by tuning in. We've got a really cool topic that I just love. I can't wait to pick the brains here at the table. We're going to talk about what it's like to, how do you position yourself when the market bounces up against all-time highs? Are you investing in a bubble? Are you ready for a breakout? How do you know that? And so we'll talk about the problems. 'Cause a lot of people don't even know how to handle this. They don't even know how to do it. So it'll be great. I'm here with my good friends Noah Davidson and Corey Halliday. As always, gentlemen, thanks for being here. Make sure you like and subscribe and hit your notification bell. And above all, make sure you drop by cashflowbonus.com. Cashflowbonus.com is a site with free resources that help people take action. One of the things I've found myself saying often is there's a lot of content creators and a lot of content consumers and just a lot of content, but not a lot of action with it. And if a person were to take, for every hour of content they consume, to take an hour of action with what they learned, my word. And content consumption is an easy thing to do. It's like a nice meal. You just eat it. But after, when it's time to go and do something, burn the calories, that's where a lot of people struggle. So what a great resource to go to cashflowbonus.com, find free resources that help you act and help you do and show you regimens and habits. Habits are what make people successful as much as knowledge. So with that, we're going to talk about positioning ourselves when the market's at the top. So let's do brief introductions before I forget. Let's start with Corey this time.
All right. Excited to be here. So I got started in the markets over 25 years ago. So believe it or not, a quarter of a century ago, I got started by getting licensed, Series 7, eventually worked my way up the ladder, became a Series 4 option principal, which is the head of option trading for a New York-based firm. Did that for a few years. Enjoyed it, a lot of higher stress, a lot of hours, things of that nature. So retired from that and just love the educational space. Love what we do here at the Cashflow Academy.
Fantastic, Corey. Noah Davidson, ladies and gentlemen.
I'm going to expand on my origin story here. I've told many times that I got started back in the dot-com era. And I was buying stocks. It's kind of a stock picker, and I was kind of lousy at it. But I landed this sales job working for this company called Metastock. And what they specialized in was technical analysis. Yeah. And they hired me because I had investing experience and sales experience. But what I didn't even know how to do technical analysis. I had no idea what I was selling, like this product. Like I can scan and pick stocks that are going to break out to new highs, and I didn't even know what. So I started studying really hard and learning because I wanted to be good at my job.
Yeah.
But what that ended up translating into is being good at technical analysis and finding opportunities. And I learned little kitschy sayings like, when a stock breaks to a new high, it's time to buy. You don't know if you're buying into the bubble and everything's going to crash from there because you're paying the most for this product that anybody's ever paid before. And then I learned how to position myself, and I didn't know that this strategy was super risky compared to this one that had fixed risk. I didn't even know that. And so what I committed myself to doing, Andy, was learning that art form, how to find the opportunity, because there's always an opportunity, and then learning how to position myself with the risk tolerance that I was acceptable. So
there's an old trader adage that goes buy high and sell higher, right? Which really applies to traders and momentum and trend, where for the investor, maybe buying something at the peak and at all-time highs, maybe you have some trepidation, maybe you're nervous about that. But as a trader, that type of momentum, that type of trend, that can often be in your favor. And it's really interesting that as you were talking about learning technical analysis, they didn't even know how to look at a chart, and they didn't know that there's money in that chart that's just waiting for them if they only knew how to capture it.
The irony is this, because we know what people want. People want more money. They want better life. They want cash flow. They want out of the rat race. They definitely don't want to compete with AI in the future. Yeah. They want to own AI. They want all those things. And yet at the same time, if you want a lot of money, you would think people would say, well, I'm going to study money if I want more of it. And people study everything all the way around it in school. They study how to work for it, but they don't study money in and of itself. They don't even do it.
They're money adjacent.
Yeah, money adjacent. They deeply need it. They deeply want it. They're sincere and honest in their desire for it.
Yeah.
But it is fascinating that they don't know how to generate it. And part of what we'll be talking about today that I think is fascinating is the ability to click and get paid. You think about the skill of click and getting paid, which is upfront money. We're talking about high probability credit trades, that the risk is more than manageable. And that really puts you on a different playing field, whether you're playing offense or defense. Here's an example. And people don't even know this. You look at Mark Cuban. Study guys that have made $1 billion. How did he do that? What is his story? Buffett, what is his story? They don't know. They don't study the topic. Well, Mark Cuban made his money, the big jump, the quantum leap from millionaire to billionaire was with broadcast.com, and he needed some insurance. And so the question is, how do you pay for insurance? Well, you let the market pay for it. And I think, as Corey, as you talk about this, a guy like me at the top of the market, I don't want to buy into a bubble as an investor. I don't want, if I look at a dividend and I buy, and let's say the dividend's $4 a year, if I can buy that stock at 40 instead of at 100, that's to my advantage, because I'm already at 10% baseline before I write my first option, right? The ability to buy low is always on the investor's mind, right? What point do those prices fall to where there's fundamental value? People don't know how to evaluate it fundamentally, and they're always trying to time the bottom, looking at the technical chart where you could really just see that price fall until it hit your fundamental values, and then boom, you're in. Now you might not get the very bottom.
Well, and they don't even know how to make money on the way down. They don't even know how to fund the purchase of that asset they want to buy on the cheap by making money on the way down.
And that comes back to click and get paid, because Corey made a great point. You were in the coaching forum, and it was kind of funny because some of these students have been around for a while, but it lit up like a Christmas tree, where you actually did a click and get paid trade and use it to invest. Talk about that problem that people have.
And this is something that I love, which is really at the heart of compounding. The idea behind compounding is simply that it's the goose that lays the golden egg, but then that egg hatches, and now that goose has more eggs, and then those eggs hatch, and all of a sudden you've got this cycle that's going. And so at the heart of investing is, well, we have to invest our capital. We have to come up with money to put into these investments, or do we? There's people that actually know, like us, how to have the market supply you with the money to put into your investments. So now all of a sudden, like this month, I've brought in thousands of dollars of income. I can put that money that the market's supplying me in income back into stocks. And now my concern is a lot lower as to what price I'm paying, because now, all of a sudden, if the market's supplying me with capital that I'm investing, it's sort of playing with the house's money, so to speak, where it's not my earned income, it's my passive income that's coming in, essentially, that's reinvested. And as I put that money to work in those investments, I can still use our first pillar, 4 pillars, and even if the market's at an all-time high, I can find bargains. But people don't even know how to find bargains. They don't know how to run a scan. And that's where this can be huge, because even though the stock market is at an all-time high and expensive on long-term basis, and we know it's expensive, there are bargains out there. You just have to know how to find them.
Here's the difference. So Cuban clicks and gets paid, sells some calls.
Yeah.
And then he uses those to buy some puts and collars his position. And really all a collar is when you're going to demand that the market pay for your insurance. And then you're neutral. You're just delta neutral, and you sit back, kick your feet up, and you're protected. Well, the idea with click and get paid is if you draw money from the market to pay for things, it's no different than if your Uncle Bob died and left those shares to you in his will. I mean, let's say this. Let's say your Uncle Bob dies and his attorney calls and says, hey, your Uncle Bob died. Sorry about that. But he left you, so many shares of, NVIDIA or so many shares of whatever. You're not going to say, well, I don't want those shares now. It's at the top of the market. Yeah. You get so obsessed with price that what you're trying to compound is the number of assets in your asset column. Yep. I think it's interesting the way like a Kenny McElroy will speak sometimes is you could say, well, I've got, let's say you got, $1 billion, $2 billion, whatever it is under management. Well, that's net worth. That's price. That doesn't tell me much because that could fluctuate. In a crash, the billion, $2 billion goes to 1, right? But he says, I have, 10,000 doors. Now that's not going to change as the market changes. Yeah. So the idea is to accumulate more doors. And you say, well, Uncle Bob, I don't want this stock because you're giving me this stock when it's at the top of the market. No, you're getting it without any risk because someone else paid for it. Well, why not learn to click and get paid? Let the market pay for those shares. And I can live with that a little bit more compounding. What I can't live with is the 401k guys that just constantly put it in and buy at the top, because that's their hard-earned money getting put in there rather than the house money.
And there's a freedom that comes from having the market supply you with money, at least in part, because that fear is that people are thinking, well, I'm going to work and I'm putting in, 40 hours a week and I have this extra income. I'm very nervous about how well it's going to do. And they're fixated on the price. And if the price goes up, they're happy. And if the price goes down, they're sad. And if the price goes up, they're happy. And if the price goes down, they're sad. And they're just sitting there with all of these emotions. Well, if the market supplies us with capital, click and get paid, and then we invest that, it's sort of like, the feeling is like inheriting some stock. Yeah. Because now you're not as emotionally tied to that. And in investing and trading, the more detached you are from emotion, the better you're going to be.
Steve Jobs, I speak about this moment a lot. I get interviewed by it or on this a lot. People say, Andy, what are the big life-changing moments? What are the big aha moments? And I speak often about Steve Jobs, where he says, your time is limited, don't be trapped by dogma. And you can get dogmatic really quick when you're searching for the silver bullet or the Holy Grail. And there's a book called The Intelligent Investor by Benjamin Graham. It is a classic. It is very important to realize when it was written, because it was written before the options market was invented. And in that book, I was in it just the other day, as a matter of fact, he speaks about the difference between investing and speculating. And he really lays that groundwork down early. He says, look, there's nothing wrong, inherently immoral about speculating. Where you fall into trouble is when you confuse the two. Don't invest, don't confuse your trading with investing, because they're not the same thing. Yeah. And vice versa. Don't commingle. But what's interesting is back then, and it would have been a very antiquated version of it if there was available at all. But in the options market now, we can do credit trades. And that's a lot different type of speculation, and people don't know this. People don't know that when you say time is money, and you put that equal sign in there, that time is money, that's every bit as literal as E equals MC squared. As mass moving fast is the same as energy and vice versa. You slow energy down, it becomes mass. You speed mass up, it becomes energy. It's equivalent. E equals MC squared. Theta trading was not something that was a staple. Credit trading was not something that was a staple in 1920, 1930. And so it's very, very important that people understand their time could be cashed in for money. And every day, people do not know that regardless of where the market price is, every day that goes by is a day they could have cashed in to one degree or another had they known how to turn time into money. That's what rate is. Rate, if you look at the rate, it's always money and time in the same sentence. Oh, what do you make? Oh, I collect, $1,000 per month cash flow on this rental property. $1,000 per month. You're taking that month and you're turning it into $1,000. And every day you don't have a rental property is a month that you can't convert time into cash.
Yeah.
Insurance companies convert time into cash. You're paying for this. Options are primarily made up of time that expire, and every month a person goes without knowing how to sell an option the proper way is a month they don't collect that cash. They're
missing that cash flow opportunity, and it's
killing them.
It's one of those things where you can always tell the passage of time. Like when I was a college student, I always hated when the first part of the month was coming because you knew you had more expenses to pay, right? And you're like, oh, this is a debt overhang. This is things I got to come up with. I got to make sure I've got enough for this and that, my schooling. And so it was like time ticking away was, oh, it's going to set me further back and I've got to get ahead of it. And then all of a sudden there's a transition in life that hopefully everybody makes where the passage of time, you get further and further ahead. Every month now you're cash flowing, you reinvest that cash flow. Well, now it generates more cash. And so each month you're getting further and further ahead on the positive side. So when we look at, we always talk about these 6 numbers, right? You bring in your income, you minus your expenses, and you're left with hopefully positive cash flow at the end of the month. That positive cash flow increases the more doors you own that you can now rent out to people, or the more stocks you own that you can now generate cash flow off of. And the very fact that people own stock and are not generating cash on that stock means they're missing out on a huge chunk of income every month that then compounds. And so what you think you might be missing out on that's hundreds of dollars, you're actually missing out on thousands of dollars that then becomes tens of thousands of dollars that you're missing out of, all because you don't know how to create that cash flow.
When we come back, we're going to get a little more granular, and I'm going to have Corey and Noah both give an example of a trade at this height of the market. Like you have the market bouncing up against an all-time high. Got guys like me that are absolutely think there's a bubble because there's no worry about there being a bubble anymore. And like you always say, the biggest sign of a bubble is when people aren't afraid of a bubble anymore.
Right.
And so I'll have you talk about a breakout trade directionally. I'll have you talk about maybe some 5-direction stuff. But when we come back, we'll get more granular and talk a little bit about how do you position yourself and how do you create wealth off market highs. Don't invest in the bubble, get paid by it. So when we come back.
I am learning a lot, and it's easy to understand. Andy is fun. Andy's very enthusiastic to watch. He makes it a lot simpler to understand. I'm really benefiting from everything that he's teaching. I think the most valuable thing I've learned from Andy so far is the fact that it's not scary and it's easy to do.
Anybody can do this with the right amount of education, effort, and willingness to learn. You can learn it too. Andy, thanks for making this simple. Thanks for making this fun. Thanks for pouring your heart into this. Thank you very much.
Welcome back to the Cashflow Academy podcast. Andy Tanner here. I'm your host. This is where we make investing fun, simple, and real. I'm here with Corey Halliday, Noah Davidson. We're talking about how to position yourself at the top of the market. For me, it can be very tough to go and take big positions when I see the Schiller PE where it is, right? It's just, you feel like you're not getting a lot of cash flow and a lot of value. Buffett sticks his money on the sideline, waits for crashes. But the thing of it is, in waiting for a crash, you don't want to halt compounding. Mm-hmm. And you certainly don't want to lose the time that could be turned in. I mean, it's alchemy. You're turning time into cash. And if there's a way to get credit, if there's a way to click and have money come to your account, you would think that anyone that wanted more cash in their life. If there's a way to click a button and just demand cash up front, up, down, or side, demand cash at high probabilities, very predictable probabilities, and risk management to cover. If you're in a 90% successful probability trade, well, then your risk management, you bring that in only 10% of the time. And if you have that risk management, you're good. So people are losing money. They're losing opportunity. They're not gaining the cash flow that they could and should have, simply because they do not know how to click and get paid. And if you'd have told me in high school that there was a vehicle for me, an opportunity for me to simply say, yeah, click and get paid, I would have said, sign me up for that major. I don't want to be a herpetologist and dissect this frog anymore. I want to do that click and get paid class. When does that happen? So let's start with Corey first. And maybe just people don't know the 5 directions. So maybe we start with at least an inkling of the 5 directions.
Yeah, so in statistics and in stock movement, every stock has its own personality, its own style of volatility, and it's measurable. Here's its historical volatility. Tesla, quite volatile, right? Other stocks
Procter
like Verizon, Procter & Gamble, very low volatility. So the market can look at that historical volatility and use that as a baseline. But the way options are priced, they're called implied volatility. And implied volatility means here's what the options prices are expecting. Here's the range of volatility. So say a stock's at 80, it might give you a range between 90 to 70. And it says, hey, there's a 68% chance, 2/3 of the time, one standard deviation, it's going to be somewhere between 90 and 70. High probability that it's in one of those 3 sideways, slightly higher, slightly lower, 68% probability of those 3 directions. Well, there's 2 other directions that are outside of the norm, outside of the expected probability. 16% chance that there's a massive upside move and a 16% chance of a massive downside move. Not high probability that those are going to occur, but they will happen some of the time. In the options market, what we love to teach is we can show someone and teach them how to put on a trade that 4 out of those 5 directions, it works. You're golden. You're in great shape. If the stock goes down a little, you're fine. If it goes sideways, you're fine. If it goes up a little, you're fine. If it goes up a lot, you're fine. Only one direction that can hurt you, and maybe that's the big down move. Or you could flip that on its head and the big up move could hurt you. So essentially, you're taking these probabilities, you're learning about them, and you're utilizing a trade that has a very, very high probability of success. Well, that's only half of the story. The other half is the bigger part, which is pillar number 4. I almost said filler number poor. So pillar number 4. That 4th pillar is all risk management. And
that's
this
your
is,
life too. That's what you know.
This is where I live. Yeah, this is what a Series 4 option principal is doing, is managing risk. And so I managed hundreds of traders and talked about risk every day and all day long. Delta hedging, getting rollouts, roll downs, figuring out how to protect and how to hedge, because what some people will do erroneously is they'll get involved in the market and they'll say, hey, I'm going to make money 4 times out of 5 here, 80% probability. I got no problems. I'm going to be in great shape. But how do you handle that 20%
or 10 or whatever?
Yeah, that occasion where it goes against you. That's really where the money is made. If you're a good risk manager and you learn the strategies and techniques and know-how to manage the risk so you lose very little or you break even on occasion you could turn it into a profitable position, but you minimize damage, let the ones that are, it's sort of like gardening is the way that I explain trading. In gardening, you pluck the weeds and you just let the flowers take care of themselves, right? That's how trading works, but you have to know how to pluck those weeds. You have to know every element of risk management. That 4th pillar is the most important pillar we teach.
So people don't know this, and it's astounding that they don't. It's not taught in school, so that's not surprising, but it's astounding people don't seek it out because of the opportunities that are there.
Yeah.
What we're really saying is a lot of people will look at, this idea of they live in a 50-50 world, and they're so used to that 50-50 world. Bet on the stock, and it either goes up or down 50-50. It's coin flip. And when you learn about high probability trading, you can use all three dynamics. You can use volatility. You can make money off that. You can make money off time, which is my favorite thing to do. You can make money off price movement, which Noah is, I think he's one of the best I've seen at this. But you think about, people say, well, buy the stock, and they're so obsessed with price of up or down, they don't realize probabilities. I love the butterfly, because here we have a trade that has a ratio of very small risk to a high reward, lower probability, but very, very low risk. And playing with those three elements of risk, reward, and probability are something people do not know how to do. If you're listening to this podcast and I say risk, reward, and probability, do you know what's your place on the education continuum in terms of your knowledge about playing with risk, reward, and probability? So I love the high probability trades in these instances because they can fund your investing. Your trading ideally should fund your investing. Let me say it again. Ideally, trading should fund investing. It's just like the cash flow game. You go small deal, small deal, small deal, market cards, sell your small deal for a big deal, make that trade. Now you're investing in bigger stuff. So that's a huge deal, is to know how to do a credit trade or know how to do a delta trade where you have high probabilities or high risk reward ratios against low probabilities. That study is not only exhilarating, but it's very powerful.
Yeah.
When someone makes the decision to say, okay, I think I know what I want now. I thought I wanted a lot of money. That's what I thought I wanted. But what I really see is I want some knowledge. I want to know how to do that. And I'm going to apply my genius to that. That's what I really want. I want to know how that works. And when someone makes that flip, that's when the cash flow, they're so worried about prices of stocks and they're not worried about learning about stocks.
Yeah.
And that's when they make that flip in realizing what they really wanted was knowledge. I want to know how to manage risk. I want to know how to do a butterfly. I want to know how to click and get paid. I want to click a button and get paid. I want to know how to do that.
Yeah, we all have this where a friend or family member will reach out, and I have this happen all the time where they'll express some interest. Hey, I want to learn more about what you do and how you do this. And I'll usually do, it kind of reminds me of the wedding singer where he goes to the bank and he says, I like money. I need more of it. That's where you come in. That's kind of the approach. Was what they're asking for is teach me how to make money, right? And so I usually do a little Miyagi thing where I'll give them a homework assignment. Because to me, I would
get rid of them.
I would love to help them, right? But most of them aren't serious.
Yeah.
Right? And so I'll give them a homework assignment. If they come back and they've done the homework assignment, and it will be educational, it'll be something, and most of the time there's no real interest, no real follow through.
They don't deserve to get rich though.
Exactly.
It's like cashflowbonus.com.
Yeah.
It's free.
If you won't go there, you don't deserve.
Yeah. It's a homework assignment. Go check it out, and all of a sudden, life changing, right? Life changing.
But a few of them will. They'll actually do the homework assignment, and they'll come back and they'll want more. And that will tell me all I need to know about the seriousness of this person.
Yeah.
And the vast majority don't, right? But those that do, I've seen it make. Like, I've got a brother-in-law, I've referenced him before, and he's just fascinated by the financial markets. So I fed him more and more. He now works at Fidelity. He's kind of followed my path of getting some licenses and doing some of those things. And it's just fun to see because most of them aren't serious, but the ones that are, it makes a massive difference. Now he's cash flowing. Now he's utilizing that cash flow, turning it into additional stocks. He's so proud of the stocks he owns and the ownership stake. And I know you see this from your own sons. Like, we're proud to own these businesses, and we're proud of these assets we're acquiring, not as like I'm better or something like that. It's, hey, I've worked hard for this. I've worked hard for the knowledge, and now I can turn it into something.
Before I go to Noah, I'll make this point is when you play Monopoly, you're always in buy mode. Always. Yeah. And the game is to get as much of the production as possible. In other words, own production. I say it every week. I say it all the time. People don't understand what I mean. Look, there's a certain amount of land in real estate, a certain amount of land. You want to own as much as it is possible.
Yeah.
Right? And you always want to be acquiring. It's not about timing this. The idea here is if someone else is paying for it, I don't care.
Yeah.
That's the point. I don't care. Well, the stock market is simply owning the world's production. And you want to own that work that's being done. And I say this, a new theme that everyone can just put in the chat, there he goes again, is that's the way to leverage AI, because it's going to take your job.
Yeah.
We can't have a podcast without bringing this up because we don't know who has heard and who hasn't. But if you look at the trajectory of where it's going, name one human task that we're not trying to automate now. Try to find a task that isn't trying to be automated. We have robots that can set tile. We have robots that can mow grass. We have robots that can do any manual task. Okay, what about thinking tasks? That's even easier now. We don't have to move anything. We just have to think faster. So as that trend continues, that eliminates the value of human labor. It literally will eliminate the value of human labor. The ownership of that production is your key. It's funny, people are going to get out of the rat race because they're going to get kicked out. And, there's going to be a huge push for UBI, and that means everyone's the same. And that means you don't get a chance to be great anymore. You don't get a chance to stand out. You don't get a chance to make your dreams or your life the best you can possibly make it because you're going to be constrained unless you have ownership.
Yeah.
Noah, talk to us now. So you're talking about click and get paid 5 directional trades where 4 of the 5 are solid, and you can get that risk window down to about a 10% probability of needing risk management.
Yeah, and then turn that cash flow back into investments.
Into more shares.
Yeah, absolutely.
And then you increase the ownership of what you have. That's how we do it at the top of the market.
Yep.
I want more shares, but I want the market to pay for them at these prices, not me.
Yeah, one note on Monopoly. I never liked the railroads because their upside was so limited, right? It was like you land on the railroad and you just don't make enough. But if I can get some of those properties where I can put the houses and the hotels and all of a sudden move up to bigger cash flow, and that's kind of how I look at it from the standpoint of missing out on different strategy and cash flow opportunities is your upside is so limited. Can you be invested in a 401k and do okay, just mirroring the stock market minus fees? You might be able to do okay, but man, how much more could you do if you could generate more cash flow off of that? If you could have Park Place and Boardwalk, and then people are landing on those.
Hotels on Baltic Avenue. I'm a slumlord.
Yeah,
I'll take it.
Exactly.
Pottersville. It's Pottersville. Noah, here's an interesting question for you, and I think a way to set this up is one of the gifts you can give people is to relocate their locus of control. It's a wonderful gift because people will feel that they're powerless. They'll feel that the victim, that they'll feel the world impacts them, which it does, by the way. We're all victims of something. I mean, no one goes through the life without getting a punch in the nose or some type of unfairness. I don't know anyone that should expect to go through life without some unfairness. It's unfortunate, but it's there. But when a person all of a sudden realizes that they have power, it's kind of a double-edged sword because it does take away the comfort zone of excuse. We no longer get to say, well, nothing I could do about it. Now we have to say, well, I could have done something and I didn't. And not very many people want to get that gift. But when you can get to the point where you say, I could learn technical analysis. I could learn a skill like Noah Davidson. I could learn to be the ultimate swing trader. I could learn technical analysis, and I could now have a skill for breakout. So that's a good way to put that on a silver platter for you, I hope.
Well, we're going to bump, serve, set, spike. It's going to come in. All right. So I love this moment in time. The market's broken to an all-time high.
Yeah.
And psychologically speaking, it's exhilarating and terrifying all at the same time because the sky is the limit. AI is going to make things go 10x.
I'm less bearish because of AI now, because of the production. It's going to be so hard to keep earnings down.
Yep. But there's always a big but. It's a disruptor.
Yes.
That could cause mass chaos and market meltdown.
It's like .com.
Pretty much.
Boom, bust, boom.
So there's this potential for boom and bust, and I think both are going to happen.
I hope we have a nice size bust before.
Well, wouldn't that be awesome? Because then you could pick up everything.
But in the meantime, I want shares.
So here's the thing. Psychologically speaking, breakout buy. When it breaks to a new high, it is time to buy. But what if it goes down?
What if we're in a bubble?
What if I'm wrong?
Which we are in a bubble.
Okay. And so what I love to do is I love to keep cash on the sideline. So I'm ready to buy for the bust. But I also like to make money on the upside. So that's quite the conundrum. So here's some ideas. I'm having a fun month in the markets, by the way. It's pretty awesome. What if I click to get paid to buy an asset I really want to own if it goes down, if it goes on sale? So and people don't know how to do this. People don't know how to sell.
They don't know how to get paid to buy.
Or a credit spread. They don't know how to get paid. So what I like to do is I like to mix and match strategies. I will sell puts, get paid premium, income, new money, not my money, new money. And then I'll take that new money and I'll use it to speculate. So I'll take that and I'll speculate, you know what, this stock that I like, I want to buy it, but I want to buy it when it goes on sale. So I make that promise, get paid, take the money and say, but in the meantime, I think it's going to rip higher. So I'll speculate. And so I use other people's money. My money is safe in my account, ready to buy the thing. But the new money is now paid for the speculative tool. And then when that pops, I got a new income. And now that goes into my stack of cash that's ready to buy the next big dip. Mm-hmm. And then I'll rinse and repeat that process. And I'll use leverage in creative ways where I'm not exposing myself to big downside risk, because that's a big fear. People are afraid to buy the thing.
And when we say leverage, everyone hears, non-investors hear debt.
Yeah,
they don't understand what non-debt leverage is. Debt-free leverage by contract is different.
Well, yeah, when you mentioned earlier a butterfly trade, like people don't know how to do a butterfly trade. But if they did know how to do a butterfly trade, they would realize, oh, this is a breakout opportunity where for a very small amount of capital, I could make a big return, and then I could take that return and turn it into an asset that I own. So you're using small, and most of the time we're talking about options and contracts, and rich people use contracts, Andy, to protect themselves, and they use contracts all the time. And you talk about a big sports player getting a big contract with the Nike company to sell the shoes. I mean, that's a contract that can make you rich. Well, an option is a contract that can make you rich. Knowing how to use those contracts to optimize your returns and limit your risk are two powerful skills that people don't know. And if they did know how to do that, a breakout opportunity all of a sudden becomes like a playground. Like, wow, I don't know if this thing breaking out to a new high is going to continue to rip, because 9 times out of 10 it does. But it's the 10th time that it gets. There's a fine line between a breakout and a fake out. And the stock starts to break out and then says psych and then rips down the other way.
And so the nice thing about the strategy is if the stock goes up, you make money, which you can then cash in and go buy some shares if you want, because it's the market supplied you with money. And if the stock goes down, you get to buy it cheaper than where it was before.
It's a win-win.
So it's a win-win situation. Stock goes up, stock goes down. You're in a better spot in both dynamics.
There's just something about having the market pay for it that helps.
Yeah.
If a person had to sell one asset to fund another at a higher price, that would suck. If a person had to go out and mow grass or whatever a person does for a living to take that money and put it at the top of the market, that would suck. But if you can click and get paid, and the market is funding the additional shares you add. There was a moment in that coaching session that I thought was really interesting where you did a click and get paid, and usually we just bank the money and move on to the next lesson. But what you did that was really an epiphany for a lot of, even some of our longtime students, which surprised me because they should know this, is tell us a little bit about how you just took that extra step to say, I just manufactured cash and drew it from the market on demand.
Yep.
And then I immediately took that I mean, really, in theory, you could take, you take 10,000 shares, and you click and you get paid enough to buy another 1,000. Then you take that 1,000 shares, click and pay to get another 100. I mean, you could actually do that a couple times through and compound to the nth power.
Exactly. And the way I like to teach it a lot of times would be with like silver coins or gold coins or something along those lines. So you can kind of think of it in terms of, you don't have to own the silver coin right now. You can make a promise to buy the silver at a discounted price. You could say, oh, it's at $30 an ounce, whatever it's at. I'll buy it if it goes to $25. I'm not even going to buy it today. I'll make a promise to buy it cheaper. And the market will immediately pay you money. And you take that money and you go buy a silver coin. That coin you didn't pay with your own money. The market gave it to you.
The old SLV trade.
Now, if it doesn't go down, the contract expires, you make a new promise. The market supplies you with more money. You go buy another silver coin. Now you got 2 coins. And all of a sudden, people are like, wait a second. Have you used
You're inventing coins out of nothing, Corey.
What are you, the
you're
Federal
getting
Reserve?
coins.
Actually-
But that's why I like to
actually-
use silver as an example,
you're
because
actually
people
turning time into silver.
exactly
It's just a matter of time. You notice the word
turning
expiration
time
into money.
That's
into
some
actual money.
That's
Rumpelstiltskin
Rapunzel.
stuff right there.
Rapunzel.
Rumpelstiltskin stuff.
Let down
and
your
so-
hair.
So we can do that with silver, right, with the SLV, but we can do that with stock. And owning a company is just as real as touching a silver coin.
it's more real.
It's
more real
Yeah.
because it's service, it's value, it's not an inanimate object.
Yeah.
I would want to own production more than a static commodity any day of the
Right.
week.
And I mean, some people have a hard time with stocks because they feel like it's not something that I can touch the wall or whatever.
That's a bunch of
go,
baloney.
Go into
No.
Apple Store.
I'm done with this. The next person that says a stock isn't real, I'm going to say, well, I own some Berkshire. We own a company called Burlington Northern Santa Fe.
Yeah.
Now I'm going to set you on these railroad tracks. And you're just going to stand there and let this train come, and you decide what point you think that company is real.
Yeah,
you
exactly.
decide. You stand there on those railroad tracks and look at that thing coming. You just let me know if you want to say, "Oh, it's all just
fake.
paper."
Yeah.
It's all just paper. You just stand there on that railroad track, and I get the feeling there'll be some point where you're like, okay, that's a real train, that's a real company.
Yeah.
I can definitely not only see, touch, feel, I can hear it.
Yeah.
I can feel that.
It's more real than the silver coin, but
For sure.
it is an eye-opening experience. And we had that with our coaching group where, and I've taught this principle before, but sometimes you just hit one that just hits home better.
But it's
right?
so funny.
It's
People
awesome.
but people are kind of dumb because when you talk about Rumpelstiltskin, they want the gold, but they don't want the secret of turning the straw into gold.
Yeah.
And it's the knowledge that's the more valuable of the silver coin. They want the fish. Give me the fish. They're like children.
Yeah.
They're like children where you can take an ice cream cone and a $100 bill, and a child would choose the ice cream cone thinking the $100 bill isn't worth anything.
Yeah.
With adults, you put a $100 bill in front of them and some knowledge, they'll choose the $100 bill instead of the knowledge.
Yeah.
And they don't know what they want. One of the things that will really help people, that I hope happens on this podcast, whether it does for some or not, I don't know, that they get more clear on what they want. Because if you get clear that you want knowledge and that it's a good thing, an exciting thing, when people come, you mentioned the people that come to us, hey, help me with this, help me with this, they don't want to learn anything.
Yeah.
That's the biggest where I shuck them. I say, do you want to learn something? No, I just want the money. It's like a little child. Give me the ice cream cone, not the $100. An adult, give me the $100, not the knowledge.
And that's such a great analogy because
They don't know what they want.
I think about this trade-off. If somebody offered me $1 million for the knowledge I have, how to make money in the markets, I'd never accept that.
Yeah.
Right?
Yeah.
Not $1 million, not $2 million. I would not make that trade.
Not in a
because
million
the
years.
knowledge can make me so much more than that compounded over time. It's not even in the same realm.
The difference between Buffett and not Buffett, they both got in the stock market. Just one knows more. People want to say this asset class is better than the other asset class. No, it doesn't matter.
Yeah.
It's what you know about that asset class. So at the top of the market review, you have the market. It's the perfect time to have the market pay for more shares. It is a great time because I'm not going to go in and sell a piece of real estate right now. I'm not going to play that game, liquidate one of my real estate to take a huge position at the top of the market. That's just a lateral move that doesn't make sense. But if I can generate new income and have that new income buy things, and that's not to say that I'm going to buy the S&P 500. There's still opportunities within a big market where things are undervalued everywhere.
Yeah.
Well,
if they knew how to do fundamental analysis, which most people do not. So there you go.
If they knew how to do technical analysis, if they knew how to cash flow,
If
if
they
they knew how
knew
to
the
manage
4
the
pillars.
risk, they knew their 4 pillars.
So there you go. How do you do that? You click and get paid. You can do it with the 5 directional credit trade. You can do it with targeted butterflies. You can do it with breakouts with technical analysis. There's a lot of ways to profit when the market's all-time highs, and let the bubble expand. The smart money is in expanding that. You know? And there will be a beautiful, beautiful bubble. It's a beautiful bill. I mean, a beautiful bubble.
It's a big, beautiful bubble.
It's a big, beautiful bubble. I can't wait.
It's a bubble that's big and it's beautiful.
Oh, geez, that's pretty
Well, it's
good,
going to be
man.
really beautiful when it bursts.
It's going to be
And
freaking awesome when it bursts.
Most people are going to be freaking out, and we're going to be just see opportunity.
But I prefer to buy
and-
things on sale, yes.
Yeah.
And I'll do that with my own money when they're on sale. But when they're not on sale, let the market buy those shares for me.
Exactly.
And we'll still find our intermittent sales. So
Yep.
great conversation. What is it that you want? Do you want more money? Of course you do. But do you also want knowledge? And do you value knowledge? I think you do. If you're here, you didn't come for entertainment, I wouldn't think. So go to Cash Flow Bonus and collect your bonus. That's all free stuff there. These are action-taking bonuses that help guide people into actionable steps that bring you closer to being a person that has knowledge to click and get paid. And if you have that knowledge, you can get paid every month for the rest of your life as long as these markets are around, and they're not going anywhere. Why? People need food, clothing, shelter, energy, medicine. There's always going to be needs. Therefore, there'll be production to fill those needs. You want to own production, and that's how you do it at the top of a market.
You want to have your share.
Yeah, as many as those shares as you possibly can. So with that, I think Noah, I think Corey, you've been watching and listening to the Cashflow Academy podcast. We make it a lot of fun, make it simple, always keeping it real here. We'll see you next time.